Hi, welcome back to Financial Market Starter. Alex here. In this video, we are going to cover the different types of financial product. There are hundreds, if not thousands of financial products in the market today. However, we are only going to cover the major ones here. In this video, we will be covering the following products: cash, fixed deposits, unit trusts, stocks, REITs, ETF, gold, futures, CFDs, and Forex. Number one is cash. Cash is money in notes, coins, and in your bank accounts. They can be used to exchange goods and services, and they are the most basic form of financial products. You must know that all money are fiat money. This means that they are not backed by anything other than the words of the government. This gives the government freedom to print as much money as they like. However, this also creates a problem when money will lose its value over time and result in inflation. This is why a bowl of noodle today costs more than it was 10 years ago, and it will cost even more in the future. We really do not want to keep cash, but convert them into value assets as soon as possible. Number two are fixed deposits. Fixed deposits are bank accounts where you lock your money away for a specific period of time in return for a higher interest rate. Fixed deposit is a risk-free investment product. Your money is safe here, and you are guaranteed to get your full capital back plus interest. However, a low-risk investment product comes with a low return on investment. With an interest rate of around 1.25% per annum, this is not enough to beat inflation and build wealth. This is, however, a good place to temporarily park your money before you put them into good use. Always use a 6-month or 1-year fixed deposit account so that you can quickly access your cash when opportunity arises. Number three are unit trusts. Unit trusts are unincorporated mutual funds that are structured to hold securities. They are managed by fund managers. Although unit trusts are popular among many laymen, however, I do not recommend that you invest in them. Unit trust is a popularity contest. When you approach the banks to buy unit trusts, they will always recommend you the most popular funds today. This is because bankers are just salesmen. They will try to sell you what they think is easy to sell rather than what you really need. For example, if oil is popular in the market today, the bankers will recommend you oil-related funds. But now it's already too late to buy because prices have already risen quite a bit. You should buy before it becomes popular and not after. This is why some people take decades to break even. Unit trusts may sound like a good investment, but they are really not. And when you know how to invest, believe me, you will not want to touch unit trusts. The next thing is that unit trusts have a yearly management fee which you must pay on a yearly basis, regardless the fund performs or not. This is ridiculous to me because this does not incentivize the fund manager to perform, and it also results in many funds underperforming. Number four are stocks. Stocks are securities that represent a fractional ownership of a corporation. When you own a stock, you own a piece of the company. Stocks are great financial assets. However, not all stocks are the same. Some stocks are great for trading, while others are great for investing, but many are just worthless. Our job is to find out which is which. The great thing about stocks today is that you can buy stocks across the world. Not only you can buy stocks in your own country, you can also buy stocks in other countries. This gives us the advantage of finding opportunities across the world. As opportunities flow from region to region, we can follow them and invest in that region before it blooms. Number five are real estate investment trusts, or REITs for short. REITs are companies that specialize in owning and operating income-generating properties. By owning a REITs, you are indirectly owning the properties that it holds. This is another way of owning properties without having to fork out a lot of cash. By law, REITs must pay out 90% of their income to their unit holders. This makes REITs an ideal investment for passive income. I would recommend REITs to anyone who are looking for a passive income. With a good eye, you can easily earn a passive income of 7% per annum and retire peacefully. Number 6 are exchange traded funds, or ETF for short. ETFs are investment securities that tracks and index a sector or a commodity. ETF is a great way to own a basket of stocks. For example, when you own the STI ETF, you are indirectly owning the 30 companies within STI. This spreads out your risks, and the chance of losing your entire investment is virtually zero. If you are interested in gold, you can buy gold ETF. This is an indirect way of owning gold, and as gold ETF is traded in the stock market, you can quickly buy in and sell off anytime you like. Number 7 are physical gold. These are investment grade LBMA certified good delivery gold bars. Gold is an important part of our investment strategy because there are protection against unforeseen disasters and hyperinflations. Every time when there's a major disaster like war, gold price will shoot up. We should treat gold like an insurance, and like all insurance, you want to buy a little but hope that you never have to use them. In Singapore, the only bank that buys and sells gold is UOB. You can get them via the UOB Gold counter in the UOB main branch. Alternatively, you can get them from other gold bullion dealers. There are many types of gold bar, but I'll recommend that you get the 100 gram or the 1 ounce gold bars because they are the most value for money. Number 8 are futures contracts. Futures contracts are legal contracts to deliver a commodity or security on a specific date in the future. They are traded in the futures market and is purely for trading. In the futures market, you can trade agriculture products, energy, precious metals, indices, currencies, and more. Futures is a leveraged market, meaning that you only pay a small portion of the trade and the rest are borrowed. This is a double-edged sword because you can trade more with less, but you can also lose more with less. If you are not careful, you can overtrade and commit more than you can afford. Because of this, you must be extra careful when trading leveraged products and always watch your position closely. Number 9 are contracts for differences, or CFD for short. CFDs are financial contracts to pay the differences in the settlement price between the opening and closing trades. There is no delivery of securities here. CFD is also a leveraged market and is purely for trading. The advantage of trading CFD is that it has a wide variety of products. You can trade stocks from multiple countries and commodities from all markets. The disadvantage of CFD is its high fee. CFD is popular among small traders because it only takes a small amount to start. However, when you add up all the fees, it is actually more expensive to trade CFD. I will not recommend you trading CFD. Number 10 is Forex. Forex is the trading of the exchange rate between two currencies. Forex is also a leveraged market and is purely for trading. The main problem with Forex is that the brokerage firms use spread to make money. Spread is a gap between bid and ask price. Because the spread is not fixed, accurate entry in trading is difficult. Therefore, I do not recommend you trading Forex. Now that we come to the end of the list, you should already know that all these products can be divided into different groups. The first group is for temporary holdings. These are cash and fixed deposits. The second group is for investing. This includes stocks, REITs, and ETF. The third group is for trading, and here we have stocks and futures contracts. Next is the protection of our investment.
Think of this like an insurance. And to do this, we have gold. Although you can buy gold ETF, but I would strongly recommend buying physical gold bars. Lastly is the group that you must not touch and must avoid at all costs. They are unit trusts, CFDs, and Forex. If you are interested in trading futures and making fast profits, then you will be interested in our Alpha Futures Trader course. In the futures market, you can trade indices, precious metals, energy, agriculture, currencies, US treasuries, and cryptocurrencies. So, if this is what you are interested in, just click on the button below to join us now.